high. I am the inspiration that led success soar high. I will achieve, I will fly high. I am the I in SBI.
I'm backed by the nation's trusted bank, SBI, the banker to every Indian.
Hello and welcome to the Business Standard Banking Show, where we bring you the story behind the major developments in the banking space. It is the 7th of September and I am Ruchika Chaturvanshi. Our cover story today is all about the journey of the Pradhan Mantri Jan Dhan Yojana. For Banker's View, we will be joined by Ajay Garg, Managing Director of Equirus. Our Banking for You segment today will tell you about RBI's UDGAM portal. In Expert Take, Tamal Bandyopadhyay, our consulting editor, would talk about the M&M and RBL saga. At the end of the show, we will share with you the results of the last week's poll and the question for this week. The Pradhan Mantri Jan Dhan Yojana recently completed 9 years. The scheme was launched with the expressed objective of providing universal banking services by opening zero-balance bank accounts for every unbanked household. Kasturi Akhil and Ashutosh Mishra tracked the journey of the Jan Dhan bank accounts from zero balance to now a viable business opportunity for banks in our cover story today.
The PM Jan Dhan Yojana accounts have crossed the 500 million mark within 9 years, and 55.5% of these accounts belong to women. They may have started as zero-balance accounts but now have over 2.03 trillion rupees in deposits. In March 2015, 58% of Jan Dhan accounts had zero balance. Now this number has come down to just 8%. The Pradhan Mantri Jan Dhan Yojana was launched in 2014 to improve access to financial services for the unbanked. It facilitated people from lower income groups to open bank accounts with zero balance and avail direct government benefits and subsidies more transparently. The Jan Dhan accounts proved beneficial, especially during the COVID-19 pandemic, which hit poor workers especially hard. The centre announced a monthly aid of 500 rupees to help 200 million Jan Dhan account holder women for 3 months. The substantial increase in Jan Dhan account deposits has also been driven by direct benefit transfers from the government to account holders. As per the latest data, the government has transferred 7.16 trillion rupees in FY23, which is 100 times more than the amount in FY14 when direct benefit transfer was introduced. So has Jan Dhan become a viable business proposition for banks?
There are some banks which clearly come to our mind. I mean, State Bank of India, for example, has the largest number of Jan Dhan accounts in the country. And it has really done very well, in using the Jan Dhan base for cross-selling, for also reaching out, to people for loans and for other support services from the banking system. So I suppose it depends on the bank. Overall, you're getting an impression that most of the banks are still earning a little bit of amount of subsidy transfers. They get a small fee for subsidy transfer. They're happy with that. But I suppose the real reform would happen if the banks themselves make it a point to make it more beneficial.
Moreover, linking Jan Dhan accounts with Aadhaar and mobile numbers has made transferring these benefits to verified bank accounts of genuine beneficiaries all the more efficient. Apart from cash transfers, an overdraft facility and an accident insurance cover with an enhanced 1 lakh rupee coverage provided to RuPay card holders are some of the other features of the scheme. Speaking of RuPay, the number of RuPay debit cards issued for PMJDY accounts increased to about 340 million on 16th August from around 130 million at the end of March 2015. This has improved the prospects of digital transactions and widened access to banking facilities in areas with low penetration.
We started noticing that the zero balance accounts have gradually reduced. At one point in time, they were as high as about 60 to 62%, which means as soon as the person got the money, he was withdrawing. when he was withdrawing in cash and using it in cash. At least that behavioral changes happened. He started using RuPay card for meeting with his expenses as well. So gradually the economy is becoming cashless, and when he makes the payments through the cards, for instance, then a certain amount of balance is retained in his account. The whole reform, it's been a silent revolution. You don't find this parallel in any other economy, in any other country.
Overall, the Jan Dhan Yojana appears to be a viable business proposition for banks. By bringing a vast customer base from rural and semi-urban India into the banking fold, these accounts have opened windows of opportunity for both banks and Jan Dhan account holders.
Pegged as the world's largest financial inclusion scheme, the number of bank accounts under the Pradhan Mantri Jan Dhan Yojana crossed the 500 million mark recently. The Finance Ministry is currently working to ensure that Jan Dhan account holders get maximum coverage under the microinsurance schemes. In our next segment, Business Standards Raghu Mohan catches up with Ajay Garg, Managing Director of Equirus, a niche financial services firm, about his expansion plans and why he's setting up a startup fund. Here's the chat.
Welcome to the BS Banking Show, Ajay. Good to have you here. Can you give us an overview of the Equirus Group as it stands today?
Thanks, Raghu, and thanks for having me for your show. I've been a constant follower of your editorial work and channel, so happy to be part of this discussion. Equirus is well poised, to have leadership in 5 broad business areas, which is investment banking, which includes ECM, DCM, and the advisory practice, the equities business, the wealth, asset management, and the insurance broking. I think that's sort of the 5 areas of focus for us as we're building our platform into the next level of growth. On the top of that, we are very deeply focused on 5 verticals, which is from a sector perspective, which is IT, financial services, consumer healthcare, industrials, and infrastructure, where most of our transactions rotating around the capital raising, M&A advisory, institutional equities, wealth, asset management, and insurance business revolves around.
How are you positioned vis-a-vis other homegrown firms which have come up on the last 20 years or so?
So, Raghu, that's a very good question. I think given when I started my career at bulge firms, I had observed that a lot of the markets interplay between advisory, capital market, and M&A situations, and there's always a continuous debate in the mind of issuers when they're raising capital. And one of the constant question is whether we access private equity market, whether we should access public market, or whether we look at strategic market. That's the type of domain expertise built very strongly with bulge firms who have been there for last 30, 35, 40 years. The desire at Equirus was that we bring the same level of ability to sit with mid-market companies and advise to them in terms of an efficacy of a private equity or a capital market or an M&A solution. Today, Equirus, as what we have created for the last 15 years, an extremely strong platform where we have done more than 230 transactions, straddling each of this capital raise outcomes, strategic, private markets, public markets, and achieve the issuers and the promoters' objective on capital raise and how they want to grow their business further. If you look at it from that point of view, we are the most uniquely placed position firm, because the boutique advisory firms or the various other people who are only focused on advisory at times miss out the capital market opportunity which is sitting in front of good companies, and also the capital market focused advisory investment banks at times miss out on the opportunity which is sitting in the private market. And that is something which we have seen over the last 2-3 years as we have done more than 15 IPOs and the various advisory transactions. This interplay allows us to focus our approach more from what the client would need rather than saying what our firm can deliver. And that sort of makes us the only client-centric middle market firm which can figure out the right solution for the client.
What is the thinking behind your startup fund?
I think when we are discussing in our wealth platform, we had a very successful track record in the small cap funds, and we are almost touching 1,000 crores there in our situation. A lot of our clients were also wanting to look at alternate investment vehicles in terms of the whole startup ecosystem and the disruption that is happening. And having identified the need, we got a good team with whom I had personally also invested, and we have seen that how our portfolios and the team's portfolio has worked in the startup ecosystem. So seeing the requirement coming from our wealth and other asset management clients, the need to have a startup fund, we are wanting to play and provide capital to companies who are at a early stage of their growth requirements and business plan, pre-series A or seed stage. So for that purpose, last month we had filed with SEBI for an AIF license, and once we have that, the fund will be in place.
A related issue is the question of exits via IPOs for startups. Now, this has been a contentious issue of late. Are we at an inflection point between building sustainable business versus just valuations?
So, see, I think when the last few IPOs, which had coming from the metrics of loss-making businesses seeking valuation, the markets were a little bit confused, but we did see that a broader market in the Indian context, with the domestic participation on the mutual funds, insurance, and even HNI retail data, didn't show that too much of participation of this in these IPOs. But now that debate is settled, I think everyone is very clear that business model, which are, and you're also seeing all these companies also talking about in similar lines, that if you are wanting to see market cap, there has to be a concept of profitability and return of capital to shareholders. I think that debate is completely settled now. And once that debate has been settled, I think any subsequent IPOs and anything that happens thereafter would only be keeping that data point in mind.
Will this also influence your startup funds investments?
Based on how capital and markets react, entrepreneurs model themselves. So you will see it in three formats. One is clearly there'll be a lot of entrepreneurs who have reached a stage where they can't do anything about their business model, so they will become an acquisition target. But then there'll be a bunch of entrepreneurs who obviously, having got the way the markets are looking, will remodel themselves and successfully transform, because these are good, strong management teams who have the vision and the managerial capability to transform and disrupt. So they, having got the new metrics, they will transform their business and achieve success. And the third are entrepreneurs who are at early stage of evolution. So I think they will be more aligned to building it out in a framework where you just don't burn capital. You also make a business model which allows you to return capital, and I think that is the type of frameworks which will prevail. So I think it's a continuum exercise, Raghu. Some companies wither away and new companies form, and that's a continuum cycle.
What's your interest driving a GIFT City license?
So I think given the success we have seen with our small cap fund, we wanted to take that product to our international relationships and let foreigners to invest. And we thought, that the GIFT City vehicle is a good opportunity to do that. So we have set up a vehicle there where we got the license, and that will give us an ability to get foreigners and NRIs to put money into our fund.
As on date, you don't have an outbound platform at all, I assume.
No, at this point in time, we don't have an outbound platform, but we do service international investors through the relationship we have in the US and also with our efforts in the other markets.
Ajay, it was wonderful having you on our show. We look forward to having you sometime later down the line.
Thank you.
Ajay Garg wants to attract the foreign institutional investors, and GIFT City might hold some promise for him as Equirus seeks a license there. Unclaimed deposits have been on a rise, and while the Reserve Bank of India has been raising awareness about it, its recently launched portal could go a long way in helping users. We are talking about the UDGAM portal. It is short for Unclaimed Deposits Gateway to Access Information. Raghav Agarwal tells us all about this portal in our Banking for You segment.
On August 17, RBI Governor Shaktikanta Das launched a centralized web portal to help people search and claim unclaimed deposits. This portal is called UDGAM, short for Unclaimed Deposits Gateway to Access Information. It's a consolidated web portal developed by the central bank to help depositors and beneficiaries search for unclaimed deposits across multiple banks in one place. Presently, unclaimed deposits from 7 banks: State Bank of India, Punjab National Bank, Central Bank of India, Dhanlaxmi Bank, South Indian Bank, TBS Bank and Citibank are available on the portal. The RBI announced the development of the portal for searching unclaimed deposits as part of the Statement on Developmental and Regulatory Policies on April 6th. Given the increasing trend in the number of unclaimed deposits, the RBI said it has been undertaking public awareness campaigns from time to time to sensitize people on this matter. The web portal will help users identify their unclaimed deposits accounts and enable them to either claim the deposit amount or make their deposit accounts operative at their respective banks. According to the RBI, around 35,000 crore rupees in unclaimed deposits as of February 2023 were transferred to the central bank by public sector banks. These were not operated for 10 years or more. State Bank of India topped the chart of unclaimed deposits worth 8,086 crore rupees, followed by Punjab National Bank 5,340 crore rupees, Canara Bank 4,558 crore rupees and Bank of Baroda 3,904 crore rupees. Search facility for remaining banks on the portal will be made available in a phased manner by 15th October 2023. Deposits remaining unclaimed for 10 years in a bank are transferred to the Depositor Education and Awareness Fund, maintained by the RBI. There is an increasing trend in the number of unclaimed deposits in banks, and the RBI has undertaken a public awareness campaign on the same. The new portal is a step in that direction. Reserve Bank Information Technology Private Limited, Indian Financial Technology and Allied Services, and participating banks have collaborated on developing the portal. To claim the unclaimed deposits, one needs to visit the UDGAM portal. Using mobile number, one can create an account. Log into the account and enter all details including name, voter ID, PAN number and address. The visitor will be asked to select the bank. After input of bank details, click on the Search tab. A page with results of unclaimed deposits will open on a new window. Now, the visitor can click the Export PDF button and download the details of unclaimed deposits. In the second column, select the bank from where the deposit needs to be withdrawn. The site will be redirected to a web page of the respective bank where one can get a claim form. Now, one needs to print the claim form, fill it and submit it to the respective bank with the required documents to claim the deposits.
I am the blue of the limitless sky. I am the inspiration that lets success soar high. I will achieve, I will fly high. I am the I in SBI.
I'm backed by the nation's trusted bank, SBI, the banker to every Indian.
The process seems pretty straightforward and we hope it would work glitch-free on ground as well. Moving on, in our expert take today, our consulting editor Tamal Bandyopadhyay joins us to talk about the M&M and RBL saga.
Hi Tamal, welcome to the Business Standard Banking Show. This week in your column, you've talked about the M&M RBL bank saga. Now, we all know what happened in July, but M&M seems to have had a lot of flip-flop in the whole tryst with banking sector, I'd say. Can you take us through what has happened and what has led up to its stake in RBL?
Yeah, I mean, you described it well, the flip-flop. You see, it's a very, M&M has a very checkered history in this space. Now, go back to 2013, when Reserve Bank of India last time opened up for Universal Bank, Bandhan and IDFC, these are the two, they got it. Now, there are, I would not name, there are corporate entities which had applied for. There are at least one corporate entity which had applied for but withdrew, and M&M did not apply for it. And the day it was it came in the market that M&M was not applying for it for a banking license, and the stock actually tanked. That's 2013. Now you look at this, what happened? There was speculation that M&M is buying from the market, and then they issued a stock market release saying that yes, indeed, we have picked up a stake and we were planning to push it as much as 9.9%, because up to 10%, with RBI permission, one can have it. Here the stock reversed. I mean, because it was going for eyeing a stake in a bank, and this even at the current rate, M&M is the third largest stakeholder in RBL Bank. The stock behaved in a different way. Stock again went down. So last 2013, stock went down because M&M was not in the banking space, not willing to be. This time, M&M want to be in the banking space. The stock went down. I think in the entire saga, which is a gainer kind of in terms of confidence of investor, is RBL Bank.
So how is it looking for RBL Bank?
Yeah, that's, if you look at this, he has explained why RBL Bank. It's a good management, it's doing well, it's pretty low price earning ratio, so on and so forth. So it's an ideal choice. In fact, if you see, RBL Bank had gone through a pretty bad patch, and Reserve Bank of, in fact, there was a time when almost there was a run on the RBL Bank, and the RBI had to step in with a release saying that, look, everything is fine with the RBI Bank. Now, this is very, very rare. RBI talking about a particular bank's health in the public domain, it doesn't happen very often. Post Lehman, it did speak about very large private bank, and this is the second time, more than, I think, about 15 years later, close to 15 years later, RBI came out once again with it. But it was not a case of yes bank. It was not a case of massive bad loans, etc., etc. It's essentially, it was not crumbling. It was not a stretcher case, but there are a problem. The problem of huge unsecured loan, a problem of depending on the bulk deposits, etc., etc. And of course, which is not probably in public domain, I understand the Reserve Bank of India found out that there are too many loans, not of big size, but turning bad and got written off within a year of sanctioning the loan. So something was wrong, something was not right, and probably governance also was under the RBI scanner. So what did RBI do? RBI refused yet another term to the past CEO, and RBI also put its own independent director on the boards. So these two things happen. M&M has a solid, banking correspondent arm, but till recently they were working at silos. Like banking correspondent arm was sourcing loan, and M&M and RBL was branches was for focusing on credit. Now the synergy is being exploited, and finally, I think the issues of governance is being addressed in a very, very clinical way. So I would like to believe that it's out of the woods. We need to wait and watch, but the worst is behind the back.
That's good news for RBL then. I also want to get your thoughts on RBI allowing scheduled commercial banks to issue credit lines through UPI. So it's clearly a move to expand the whole coverage of UPI payment system and the scope of UPI payment system. How do you see this panning out?
This is, I think, on the expected line. If you see the way UPI, I may sound boastful, but this is the best in the payment space globally. We can claim, India can claim that what we have done in UPI in the payment space, I think even developed markets cannot come close to it. So it's a wonderful that has happened. And you see that every month the growth of UPI transaction. And we were thinking of, I think by 2025, if I'm not mistaken, 90% of all the retail transactions will be through UPI. So at the first step, it also linked the RuPay card with UPI. It's already done. And now it's a logical second step is this, it has to be also credit linked. And of course, there are checks and balances the Bank of India has done that you need to have a of policy, and you cannot push down credit to the customer's throat. Here, the customer has to have consent and all sorts of things. So these are all technicalities. These are all kind of checks and balances RBI has put. But what has happened is exactly the way it should have done. And as I said, UPI rocks.
Yes, absolutely. UPI rocks. And as you rightly said, even developed markets do not have a product that can match our UPI. Very well said. Thank you so much, Kamal, for all the insights into the M&M RBL Bank saga as well. And we will see you next week.
Thank you.
Well, UPI rocks indeed. It is time now for our poll results. Here's what we asked you last week. Would you like to switch your credit card network? 48% of our viewers said yes, and 52% however said no, they want to continue with their existing network. The RBI has not been allowing any new non-banking finance companies to accept deposits. In 2022, it has even come up with a handbook to warn users about frauds committed by fake NBFCs. Experts have also said that regulatory arbitrage between banks and NBFC is narrowing every day. In this context, here's our poll question for this week. Should RBI allow NBFCs to accept deposits? Our poll is open from today, that is Thursday, and you can respond on Twitter, Instagram, LinkedIn, Telegram, and our website. We will be back next week with more news and analysis. Thank you for watching.
If you like this video, share it and subscribe to Business Standard. For more news, views and insights, log on to www.business-standard.com. Do also follow us on YouTube, Twitter, Facebook, Instagram, Telegram and LinkedIn.
I am the blue of the limitless sky. I am the inspiration that lets success soar high. I will achieve, I will fly high. I am the I in SBI.
I'm backed by the nation's trusted bank, SBI, the banker to every Indian.